Hello, welcome to Cryptonomy. The downside most traders underestimate, more pain ahead. First, my name is Mo. I'm a computer and data scientist. I've been a crypto investor for the past 6 years, and I was able to turn this cycle a small, modest portfolio into 6 figures. So if you want to learn about the things I did right and my mistakes and what helped me along the way, maybe try watching this video, and if you enjoy it, please like and subscribe. So what we're going to talk about today is a very important move. So the first leg down of the bear market usually forms the support, which we're going to have for several months ahead, right? Specifically, what's that move is that one right here. That's what we define as the first leg of the bear market. And as you can see, when we reach the bottom around end of January, early February, that formed the bottom for the consolidation phase that came ahead and eventually broken down into the second leg of the bear market, which is the most severe crash, right? After that, usually you get a consolidation phase where you form the bottom and continue ahead, or you make one small move again to the downside, and then the bull market basically starts from there. So to me, it seems essential, if not critical, to understand where could this range be formed? Where could this bottom be to help us better plan for the future, right? That was in regarding to the 2022 cycle. But if you go to the 2018 cycle, you see something very similar forming. Right here, the first leg down of the bear market formed the low, which acted as the support for the rest of the consolidation phase. And then the second major crash came where we formed the bottom, and the next bull market started from there. You see that again in the 2014 bear market. You hit the low, you form the level at which it will act as support, and then we finally break under it with the second leg down. Now, interestingly, what we see playing out again and again is that if we bring the circles right here, we see usually strengthening in the month of December, and then we see us forming, touching or retesting the low again in February. That's regarding the 2014 cycle. But again, we tested in April. All right, so remember these months. Here, we saw some strengthening in December. We did not get to the low in December, right? We did not get to the low of the first leg in December. We just saw some form of strengthening. I'm going to build the argument. But you do get to the low in February, similarly to the 2017, 18 crash, sorry. We did get there in February, right? And then we tested that same low that we got to in February in April. Same thing happened in 2017. In April, we retested that low. Maybe we wicked even below it, but that was the last test of that low. So the argument here is that we're going to see strengthening in December this cycle, this bear market cycle. This strengthening usually ends end of December to early January. We're going to reach the first leg down low in February, and we might test it in April. And that's all speculative, right? So before we move on, everything that is said in this video is not financial advice. It's for educational purposes only. Please do your own research and only take this as one piece of the puzzle to the big picture, right? Everybody's making guess. I'm making my best guess here, but I hope that some of the arguments I talk about do help you make better financial decisions, right? So the argument is that we're going to reach the bottom in February. We're going to retest it in April. And that also happened in the 2022 cycle. We saw strengthening in December. end of December, early January, cracked down to reach the bottom of the first leg in February. We retested that in end of April and broke it in May. And that would form the second major move of the bear market. So my argument here is that we are not here. We are here. We are seeing the December strengthening, but this is what I think. There's a chance that we might, the first leg downtrend move is not final yet. I guess we have not found that bottom yet of this move. And we might be heading lower later in next year, right? Now, how low can we go, right? Why would we think that? Is there another argument that can be presented that supports this theory? And that's all speculation, right? We're only making theories here. For all we know, we could reach all-time highs next month, right? We should always know that there could be risk we are wrong, right? So I just hope we're more right than wrong by forming valid arguments through valid reasonings. And that's the theory I'm leaning towards right now. Yes, there is another piece of the puzzle that can support that argument. And there's even a third one that will be discussed in a different video. But for this video, I'm going to talk about the two reasons. That's the first reasoning. The second one will be that we have only went down maximum 35%. If we go see in previous cycles, the first leg down was minus 52%, if you round it up, minus 53, and it happened after 77 days from the top, right, from the peak to the bottom, right? The previous one was minus 70% almost, rounding, and it took 50 days from top to bottom. That's the weekly, but if you zoom in, we made sure that the top was there. The third one was minus 67%, and it took 21 days. All right. So if we take all these percentages and we just write them down, you get something like this, right? So that's the year, the month the crash happened, and that's the percentages, drawdown, and days, right? And the second one here refers to the February, how many days it took from the top to the bottom if we skip the first touch, right? Because the first one here, everything is getting right translated in a way, right? So you can see here in December, we did not hit the bottom, we just hit it in February, but we did form some kind of strength. But if you go look at the previous two cycles, the first one, this happened in February, right? But this, we also included the April, that's the refers to, so 50 days refers to the February, 102 refers to the April, because it was kind of pushed out in a way. I hope you can understand what I'm saying. Here it happened in December, but we've also tested out in February, so I've just included both data points, because things seem December is getting thrown out the way, then sometimes February maybe might be, right? So we're just gonna go with the trend, right? And we're just gonna include both days. That's my bias. And if you do form a range at which this group aligns, right? For example, this is from the top to this point is 18 days, which is here, the low range. From the top to this point is the 102 days, the max range. And if you check the max range, this one refers to I think the April move, but here it would put us in December, in January, February, which aligns with the month at which we reach the bottom, right? January, February. That's the second argument. If you go analyze all the first leg moves of previous bear markets, then we do get a range at which it says, hello, lower for longer. And the top range says, right, minus 52% from the top to the bottom. And then the other one is minus 70%. So the low range and the high range. This just refers to low ranges of high ranges of dates and percentages, right? So we do get two arguments right now that the first move is not final. If you look at it from seasonality time, where, you know, like months, that means lower for longer. This is just the strength of December, end of the year, the euphoria. But then January, February comes around and everybody's like, hey, happy New Year's, back to reality. And then you see that kind of more depressed mood, right? Now everybody's happy, it's end of year. So that's why I believe it could be an argument why there's another leg move. Usually December is a good month, right? For stock markets, for crypto, for commodities in general, right? But January, February, we start to see corrections. That's what historical trends tell us, right? So do both points do align? Now, in the next video, what we're going to be analyzing is this move right here. The consolidation phase and its characteristics. How does it happen and where does it align? If we do, I already did the analysis. If you watch the next video, just spoiler alert, this will be the zone. And highly speculative right here, highly speculative. But this is the intersection between all theories. Of course, you have to apply deviations and events, and even if all data points point here, I think that should be just a guidance, not something to be very sure about and, you know, like take huge risk on. Even if this video convinced you, which I hope it did a little bit, right? But I hope also it didn't over-convince, right? Just always trade safe. I do hope you enjoyed the video, and I'm gonna see you in the next one. If you enjoyed it, please like and subscribe. Peace out.